Lots of questions today about, is it time to buy bonds? Well, here's what you need to know before the bell. Over the last few days, we've been talking about the stock market on a sell signal, which has been pushing down prices to support levels, which were now kind of at critical levels at that 200-day moving average. But I wanted to look at bonds today, particularly because that's really the opposite scenario of what's going on in the stock market. Interest rates have been rising as the markets are now coming to terms with the fact the Fed is going to have to continue to hike rates in order to slow inflation at this point, suggesting now that the terminal rate on Fed funds, that's the level where the Fed will stop hiking rates, is now over 5.25%. And now there's a 40% chance of a half-point rate hike in the March meeting that's coming up this month. But that has been pushing yields higher really across the board. But importantly, from a technical basis, interest rates, which are the inverse of bond prices, so as interest rates go up, bond prices go down, vice versa, interest rates are now reaching a level where they are beginning to kind of stall out here on this move higher, and we're beginning to start to register a buy signal. So again, since interest rates are the inverse of bond prices, interest rates being overbought is actually your buy signal. So all the signals are actually running in reverse. So if we get what would technically be on the stock market a sell signal, that is actually a buy signal on interest rates. So if this interest rate signal triggers, that will suggest that interest rates are going to come back down towards 3.6%. That's a decent advance for buying longer dated treasuries. So if you're looking for an opportunity to add some treasury exposure to portfolios, we're not there just yet. And again, the signal is not triggered and it can certainly still move higher here in the short term, but it is starting to get into a very interesting position. The signal is getting to a fairly high level, is beginning to start to turn here at this point. Interest rates have stopped going up for the most part right now. They're beginning to stagnate at a fairly high level, and interest rates, again, the opposite of what happens in the stock market. Interest rates are overbought, which is actually starting to show up as a buy signal for bonds because of that inverse relationship. So if you're looking to add bonds to your portfolio, look out for longer duration as an opportunity. TLT might be a good example of that, and look for this signal to actually trigger. We're not there yet, but we're getting close. So we'll keep you updated. I'm Lance Roberts, and that's what you need to know before the bell.